Hello, everyone, and welcome to another edition of the Smart Investor Market Show, where smart investors get their up to date price analysis and market information. Okay, we have looking at the markets. First of all, let's just see what is happening here with the markets. S&P 500 is trying to eke out or trying to make a closing high. We see that the market really. Let's just look at the SPY, or is SPY? Okay. Looking at the ETF, we see that the market went up, made a new high, but it's closing down. The market is currently up 1, S&P 500. The Nasdaq is up 16, and the Dow is up 5 points. So, as I said yesterday, what we're seeing is some signs of exhaustion in the markets, and we could be coming into a period where we have the bulls trying to push the market higher, and the sellers just really selling into rallies to book some profit. So that's what we are looking at. And keep in mind that the month of August, sometimes we see some funny business in the markets, and we can see some exaggerated sell-offs in the market. So not to scare anyone, not to be a fearmonger, but just trying to tell you exactly what you should be looking out for, and keep an eye on some of the portfolio positions that you have. Look for stocks pulling back more than the index average. If you are seeing your stock move down further or more aggressively than that what the index is doing, that could be a warning sign that maybe you should be booking some profits in the markets, because one of the major errors that investors always do is watch their stock go up. The stock will go up and up and up and up and up like this, and then they watch it go down and down and down and down like this. So if you bought it here, let's say this is $50, and you sold it here at $50, even though the stock may have gone up to 250, you did not make any money off of this. You just saw the paper profits and watched it come back down. That's what happened to a lot of folks in 2008. That's what happened to a lot of folks our speculators in the housing market. They bought 2, 3, 4 houses, watch the prices go up, and watch the prices tumble all the way back down. So it's not a profit until you have actually booked it. Okay, let me come off of that. Looking at the Dow, we have a similar situation. As I said, the market, all three markets are performing roughly the same. The Nasdaq is up more at 0.26%, up 16. The Russell is up 0.15. We have an increased volatility index. The VIX is up 1.61%, and it just is in keeping with that notion that in August, I just generally see that the markets get a bit more volatile. Taking a look at the US dollar this morning, we see the dollar index essentially moving upwards, currently at 93.62. This is after a huge tumble in the value of the dollar. We're up against support in the 93.92 region, so I can expect some bounces here. If we close below 92, as you can see this red line on this chart here, if we close above or below, this 92 region, we could see further losses in the dollar. And in fact, that would signal to me that the market has probably topped out. The US dollar market has topped out if we close below that 92 region. Looking at the euro, almost an inverse to the US dollar. Euro is currently trading at 117.82 and remains above critical resistance at 117. And this is fairly positive for the euro, because we are broken out of this multi-year channel type of trading pattern. And as I said yesterday, this could signal to me that we may have put in a longer term bottom. Yes, the market can come back down in the channel, but to see evidence of a bottom, it will have to stay above this low here at 104 and head back up. And if we see higher highs, higher lows, that will mean that the dollar has, or the euro has bottomed out, and we could be in a multi-year rally in the euro, or in the value of the euro, which investors need to position themselves for. Uh, Taking a look at the US dollar index weekly chart, the bottom, or the US dollar index, topped out in 2001, 2002, and then we entered a bear market in the US dollar that lasted 6 years. So if this is indeed the top in the market here, we could be seeing a decline in dollar for the next 6, 7, 8 years, 5 years, who knows? But it will be an opportunity to make some profits off of the declining dollar. Again, this has to be confirmed. For anyone who knows our philosophy, you have to follow what prices are saying. You look and wait for the market to confirm everything. Too often what we see in investing is folks make predictions and the markets don't confirm that prediction, and they stick with the bad prediction, losing a lot of money in the process. For example, I know of folks back in, let's take a look at the market, back in 2011, 2012, were recommending gold. This is a chart of gold here, in the face of this huge decline. So while they were given all the evidence of a bullish gold pattern, at that point in time the market was sinking. So the market was not confirming what their thoughts were. And it's important to let the market confirm what you are doing. And if I buy, let's say we buy at 1500 gold, it drops to 14, drops to 13. You get out of the market and wait until it starts to show a positive pattern before you jump in. Sometimes folks jump in way too early in the market. Now, taking a look at gold, we see that the market is still in this consolidation pattern, and I can tell you, a lot of folks, a lot of money managers are looking at this pattern very carefully. And why they are looking at this pattern? Because a pattern like this, if the market does resolve itself, for example, if we do break out of this is what we call a consolidation pattern. If we do break out to the upside, that could signal that this bottom that was put in gold around the 1050 area is a longer term bottom, and we could see a multi-year rally in the value of gold. Yes, that's what we could see. The last time gold rallied, last time gold put in a bottom was around the 250 mark. This was in 99, 2000, and from 2001 up to 2011, 10 years, we saw a huge bull market in gold. And that's why folks are paying attention to this gold market now. And I'm paying attention to see if this market can break to the upside. I believe it will break to the upside. And actually, we are positioning ourselves now for a break in gold, and to really take advantage of this move. Now, what you may ask, what happens if it breaks to the downside? If it breaks to the downside, then you get stopped out and you move on to something else. Simple, very simple. Folks like to think that investing, you have to be right all the time. No, you won't be right all the time. But what you do is prepare yourself that when you are right, you earn big, and when you are wrong, you earn or you lose a small amount. Looking at the oil market, going in the charts. Pretty tame from yesterday. Market is still range bound between the $42 and the 54 level, and we need to see the market break at some point to get some sense of direction in the oil market. Definitely need to see that. Now, looking at the a commodity that folks don't really pay attention to, copper. We see that copper moving upwards in the last couple of months. In 2016, we saw that the market had bottomed out, and we see a series of higher highs, higher lows now here in the copper market. So this could signal that the market is beginning to move to the upside fairly aggressively. So this is something that we'll definitely be keeping an eye out on. So while the Dow is moving up, the Dow is moving to the upside and is still fairly bullish, we have to look for other markets that are doing well and other markets that are trending. Now, a question came in yesterday as to say what are my thoughts on the rally. Okay, now in answering this question, I'm going to answer it this way. My personal opinion on the rally is that we are in the last 10% of this rally. So I believe this rally is going to peter out soon. And it looks to me to be a bit extended. That is my personal view of this rally. As you can see, we have been rallying for over the last couple of years consistently. In November, we had a slight dip in November, and this is the November period. So we're rallying. Had a dip in November, and then we went off almost parabolic. And this parabolic move is not sustainable. No matter what anybody tells you, it is not sustainable at this point in time. So we could see a topping out of the market or a huge sell-off in the market at any point in time. Yes, at any point in time. So that's my feel of what's happening to this market. We are currently at Dow 22,000. Could it go to 23? Yes, it could. It could go to 24,000. But to be in the last 10% of the rally, 22,000 will take you up to 24.5 or so in the value of the Dow. So that is my gut feeling of what's happening in the market. Now, to answer the question, the second part of the question is, how do you trade this? And our philosophy in trading is that we are trend followers. So if you have a portfolio of stocks and the trend in the market is up, my posture will still be long. I would still be long stocks, and I am still long individual stocks. There are various individual stocks I am still long. Because why? Because the markets are going up. So even though I feel the market is close to a top, I am still holding a long position. Why? Because to be consistent in the markets and to earn money in the markets, you have to have a system. And if your system shouldn't really be based on feelings and based on subjectivity. It should be based on cold, hard facts in the market. And the fact is, at this point in time, the market is still trending to the upside. So once the market is still trending upwards, then we hold a long position in the market until the system says, okay, sell this market or exit the position or take profits on your position. So I hope you understand the difference between my gut feeling that the market is in the last 10% or so, and the system, the investment system that we or that I'm using, and it's saying be still be long stocks. Now, how do you marry the two? Essentially, make sure your stop losses are in. Make sure you have an exit strategy in case these markets start to turn around rapidly. Most folks don't have an exit strategy. Most folks think the market will go up and up and up and up and up forever and ever and ever and ever. And as we have seen in the dot-com bubble, the 2008 financial crisis, it normally results in a lot of losses in the markets. That's based on my experience. That is a message no one wants to hear. It's difficult to tell folks that, okay, the market may plunge. No one wants to hear that. Who wants to hear that? Let the good time roll. No one wants to hear the party is going to end. No one wants to hear that they have to put down that last glass of wine. No one wants to hear that you have to leave the bar if you are a drinker. But at some point in time, that is a reality. And here on the Smart Investor Show, we're not here to quote the truth. We're here to give you honest, raw opinion of what is happening in the market. Now, yesterday we took a look at Apple. We took a look at the stock of Apple, and just to update, we see that Apple is making a new high today. But just to update the situation, I said if the market drops, for me, if this market drops below 145 or so, I'll be looking to exit this market. Apple, it has had a very good run, and I would be looking to exit Apple. Another stock on the radar, I put it in the thing, is Microsoft. Microsoft is rallying. And funny enough, a lot of folks have not noticed it, but Microsoft has actually surpassed its dot-com bubble high. Yes, resulting to compensating for splits, etc. We see that the market is surging upwards. In 2008, 2009, it was about $15, and we're currently at $73. So Microsoft is doing fairly well. Exit strategy on Microsoft. Stock is at $73. It is currently, I would say, this market is a hold. I'll be holding on to this market. If it slips below 68 or so, I'll be looking to book profits on this stock. Another, and in case you want, your stock to, it's a wrong signal. If in case you want your stock to be featured here on the Smart Investor Show, what you can do is send in the stock ticker and your question, and I will quickly go through that stock to see what are the buy levels, the sell levels as I see it fit. Now, another thing I want to speak about is IBM, and this is a stock that illustrates perfectly a scenario that I normally see investors do. Now, let's take a look at S&P 500. Smooth move to the upside, as you can see. Let's take a look at IBM. Smooth move to the downside ever since February, March. So the S&P 500 is going one way, IBM is going the other way. What is our situation? What should you do? There's a tendency for folks to, let's say they bought in at 170, to hold on into 160, into 150, into 142, because they say the market will come back. It will come back. If you see a stock well, this is my philosophy. If I see a stock moving down in the face of a market that's moving clearly to the upside, I'll be out of that stock, and I will not be looking to buy that stock until I see positive price action, higher highs, higher lows. Because if it's going down when the market is moving, if it's moving down when the market is moving up, when the market starts to turn around and move down, this stock will just tank, and it will perform even worse than before. So yes, there was a time when IBM did fairly well. 2009 market bottomed, went from 70 to 210, roughly a 300% move. Fairly good move, but don't be one of those investors, as I said earlier, that holds on to a market when it goes up and holds on when it goes straight back down. How much money would you have made if you didn't sell? You'd have made $0. So just if look at your portfolio and look to see if you have any stocks looking like this. Move heading downwards when the market is moving upward. That will be a red sign, a red flag that, listen, I need to circulate into something else that is performing better than the stock that I have. Okay. What I would like you to do is, if you like the show, you can hit the like button below and subscribe to the channel. What we're doing is building up the channel and providing content for you folks, that contents that you like, and it's the channel is just an avenue to provide very good information about the markets, unbiased information, free from CEOs coming in and pumping up their stocks, free from the mainstream media trying to put whatever companies they prefer on you. This is just unbiased information about what the prices are doing and what and the performance of the markets itself. So click on the subscribe link below. Thank you very much for listening. My name is Beyond Dale, and I hope you have a wonderful day.